Good evening. Ira Epstein with your Tuesday evening metal market wrap-up, and this wrap-up is for September 19th, 2023, getting on at 6:30 p.m. Central Time. So I'm going to make this fairly quick in all of my updates tonight because there's not a lot to do. Why walk into the tiger or the bear's den? It doesn't make any sense at all. Tomorrow at 1 o'clock, we get the FOMC meeting announcement. We then see the dot plot. Right after that, a half hour later, you get the Fed conference. We will see what Mr. Powell has to say when questioned. Inflation's running hot, has to be with energy prices, but we know they don't look at that. They look at the core inflation, and the Fed tries to stay away from worrying about things like the UAW strike, like the high energy prices. Can they just dodge it? We'll see. The market is overwhelmingly betting that the Fed does nothing tomorrow, but that they keep the option on the table that if they have to go up, they will go up to fight inflation. Already the Bank of Canada is saying right now they may have to go. They had already gone into the bear camp. Now they're saying, uh-oh, look at the energy prices, look at what's going on. I write about it tonight in detail in my report, and it looks to me like they may have to go. I'm not convinced, like so many are, that we are through with these interest rate hikes, but that's me. So when you look at it, what do you do with this? Well, obviously the dollar is going to be the big reaction to the market. You pay attention to that. Energy prices are finally stalling a little bit. It's rough to play the bonds or the notes because they're going to be immediately impacted by both what is said and what is said in two ways, in the statement and in the conference. In the gold, you rallied right up where I told you I thought the resistance would be on a closing basis, and for all purposes, that's where you're at, the 18-week moving average of closes. When you come to the gold chart here, where you can see you're going sideways, the pattern is one of a higher high, a lower low. That is not a setup that you want to do much with. You've been fighting at the 18-day average of closes. You began doing it back here, and now you're sitting back and you're still over there. You went up a little from there, not much, by the way. Down, you had the big break, and you've been able to come back and hold. So the gold traders are saying this: hey, if the Fed's through, the dollar doesn't go up that much more, the headwind of that is off, nobody's doing a great job with inflation, I think gold's a buy. That is the argument they're making at this point. When you take a look at Bollinger Bands, they're fairly far away to the top and the bottom side between 1972.5 and 1926.5. So those are the outlier numbers on the market. Momentum's no longer oversold. It's neutral at this point in time. The gold-silver ratio. How do you like my silver color? I don't know if I'll keep it like that, but I figured I'd show it to you. As long as you stay over this number, then the silver market numbers probably go higher. And as they go higher, that means silver's worth less than gold. When you look at the silver, you're in the midst of a bear market bounce. That's the way to look at it. Why bear? When you're under the 18-day average of closes, you have a bearish bias. When you're over it, you should have a bullish bias. When you come from a Bollinger Band and you start getting a rally, often it culminates with getting up to that number and running into a problem against it. Next, let's see if I can get this to work. Lewis, can you get me? Yeah, there we go. I got to have somebody here to help me. I want to do it again. When we look at the copper market, we have a higher high and lower low, and we are looking at the 372.5 zone. You know I was not bullish on this last rally. I told you I think it's a sucker play. But I also don't think you can get super bearish on the market. I don't think it's going anywhere. It needs China's property companies to do something. We give up on China. The company's got to do something. And while all the creditors have been more than you can imagine in votes and saying, okay, we'll give you 3 more years. Evergrande will help you with country gardens and all that's going on. They're doing it because there's no chance of getting their money back unless these companies survive. They don't want the asset that these companies can't finish and do things with. That's why the copper market's not in good shape. In the platinum market, higher lows, higher highs. Now, it's a strange thing because as the UAW strike goes further along, platinum and palladium demand should fall as you need fewer catalytic converters, right? Those are the things you got to think about as you work with that. And last, in the dollar, I'll let you figure out what it's going to do. I'll take a look at what the Fed does, how the reaction is, and I will tomorrow night have an awful lot to say. So until then, what I'd recommend you do is join me and the Linn Group, as we're going to write all about things left and right, I promise you. We're going to cover the impact of what the dollar does, be it the grain market, the soft markets, the metal markets. We're going to look at the stock market. How does it deal with all the situations that are happening? What do you do with interest rates? What if they soar tomorrow again? What if the Fed surprises you and comes with a 25 basis point hike that nobody's expecting to happen? I mean that, nobody. Well, you've got to be prepared for all this. We're going to be covering it. We write throughout the day, so you get emails of these, and you pick the subject matters you want. So if you call my brokers at 866-973-2077, they can get you set up. You can do this yourself on our website as well at www.iraepstein.com. That's iraepstein.com. You can also move your cursor up here, go to the free offer section on the website. You'll be taken care of. I'm Ira. You have yourself a good evening.